Joining me right now for analysis on the budget deal and our economy, White House Director of Legislative Affairs, Marc Short. Good to see you, Marc.
Sure, thanks for having me back.
So let's start with the spending deal. And I mentioned spending because, you know, a lot of fiscal conservatives don't like the idea that we're going to have to keep spending all this money. What do you say in reaction to that?
Well, Trish, a couple of things. Number one, first and foremost, is that we do face serious national security threats. In the budget that was passed last night, the CAPS deal, it does provide the ability to fund the military to the level that Secretary Mattis said is needed to protect our country. So that is one of the president's first priorities, and he campaigned on a promise to rebuild the military. But on the non-defense spending, we have similar reservations about the level of spending in there. But at the same time, it's important to keep in mind, the president submitted a budget last year that balanced in 10 years, and Congress dismissed that budget because they said it was too harsh. And so for some of the critics, we understand their concerns. We really do. But what we've left the scenario is that we put forward a budget that balances. And over the course of the last 6 months, since September 30th, when the fiscal year ended, all Congress has done is pass one continuing resolution after another without resolution to this issue, which continues to hurt our military. So their concerns are valid, and we share them. At the same time, we're left with a choice in this White House of do we fund our military when we have real national security threats? And that was a decision that we made that it was important for us to do.
No, look, I'm sympathetic to it because I think, you know, your job there, the administration's job, is to keep us safe. And you've got to keep us physically safe, and you've also got to keep us financially safe. But physical is obviously a big concern. We're looking at a market right now, Marc, that's up 50 points. It has been a crazy week. How do you explain? What are you folks saying in the White House regarding this volatility?
Well, Trish, I think you have more experience there than I will, but let me give you this perspective, which is that the economy is incredibly strong right now. We've seen 3% growth the last 3 quarters, expectations of even higher growth this quarter. We have unemployment at a 17-year low. We have unemployment claims at a 45-year low. And you actually see wage increases for the first time in a decade. So when you see that, there are naturally inflationary expectations. And when that's built in the market, that assumes higher interest rates. So some people will move their assets into higher interest rates, but also there's a natural reconfiguration inside the market. And so you're seeing that sort of reshuffling of dollars happening right now. But the fundamentals of the economy remain extremely strong, and we're encouraged to see even stronger growth moving forward. I just think you're seeing a reaction to expectations of inflation coming forward.
Yeah, and I would just add to that in a normal economic environment, you want an expectation of inflation. I mean, as I've said over and over again, if I can buy something 6 months or a year from now cheaper than I can buy it today, well, then I'm going to wait. And that's a much harder process to come back at. Sorry, Marc, go ahead.
No, you're exactly right. Keep in mind that the 8 years of the Obama administration, we averaged 1.8% GDP growth. It was miserable. It's the worst growth we've had since the Great Depression. People have not seen any wage increases. So for the first time, we're seeing that. Some inflation is a positive thing, as you said. You just have to keep it under control. And there's, I think, the natural resetting of the marketplace that's happening right now.
Let me ask you about infrastructure. The expectation is that we would see something on Monday. Is that going to be delayed at all? And what do you think? What can you tell us about what it might look like?
Well, I don't want to get ahead of the president, but Monday is the planned rollout of the infrastructure plan. The president has put forward some of his plans in the State of the Union speech. He's talked about, and he campaigned on, the need to rebuild infrastructure in America. I think that this plan, you'll see, relies upon a lot of public-private partnerships so that we can leverage more dollars in the investments in repairing a lot of infrastructure inside our country's
and Marc,
borders.
that's probably important, right? Because you've got to do something to reassure, again, those fiscal hawks, that you're not just going to keep spending taxpayer dollars. I mean, we got an $800 billion infrastructure plan from President Obama, and it didn't do anything to help our economy or our infrastructure.
To that point, Trish, I think you'll also see the president lay out his budget next week, and you'll see that the deficits will decline over that 10-year period significantly because Mick Mulvaney is terrific at his job, and he's going to look to find ways we can continue to cut spending. We hope that Congress will take those recommendations and put them into law.
Good. Marc, I look forward to hearing all about it. Thank you so much.
Thanks.
Have a good weekend.